Big cryptocurrency exchange FTX files for bankruptcy. Welcome to the Finance Thinker channel. We bring you the latest news happening around in the finance and tech space. Please like and subscribe for more content. Sam Bankman-crypto Fried's empire, which was valued at $32 billion just months ago, suffered a spectacular collapse when FTX filed for bankruptcy protection in the US because it was unable to handle a flood of withdrawals. The U.S. entity of FTX, Alameda Research, Bankman-proprietary Fried's trading company, and roughly 130 associated firms are all included in the filing made on Friday in a federal court in Delaware. The collapse of FTX follows a frantic 10-day period during which Bankman-Fried desperately sought billions of dollars to save his business after investors rushed to withdraw their assets, due to worries about its financial stability and connections between the exchange and Alameda, which was also founded by Bankman-Fried, a restructuring expert who managed the Enron and Nortel Networks bankruptcy cases. John J. Ray III will take over as CEO instead of Bankman-Fried, who also resigned from that position. According to Ray, the FTX group has important assets that can only be successfully administered in an organized, collaborative procedure. Therefore, the immediate relief of Chapter 11 is appropriate to provide the firm the chance to examine its condition and devise a mechanism to maximize recovery for stakeholders. According to a statement released by FTX on Friday, Bankman-Fried will stay to help in an orderly transition. In a little more than 3 years, FTX had amassed a $32 billion value and had attracted a long list of prestigious investors, including Paradigm, SoftBank, Sequoia Capital, and Singapore's Temasek. Sequoia and Paradigm, two venture capital companies, recently recorded their investment as a loss. One of the most well-known figures in cryptocurrency, Bankman-Fried, has recently demanded $6 to $8 billion to ease a liquidity shortage. The 30-year-old had expressed regret for the turmoil that had gripped his business the day before, stating, "I'm sorry. The major issue is that I made a mistake and ought to have performed better." Bahamas regulator froze the assets of FTX. Assets of FTX were frozen by a Bahamas regulator. The assets of FTX's Bahamas subsidiary have been blocked by the Bahamas securities regulator as the second-largest cryptocurrency exchange battles for its life. The Securities Commission of the Bahamas announced on Thursday that it has appointed a liquidator for the division and frozen the assets of FTX digital markets and connected parties. The commission stated that the director's authority has been suspended and no assets of FDM, client assets, or trust assets held by FDM may be transferred, assigned, or otherwise dealt with, without the written consent of the interim liquidator. In its statement, the Commission also mentioned that it had taken note of recent accusations alleging that money belonging to FTX clients had been handled, mismanaged, or moved to Alameda Research, the cryptocurrency hedge fund run by Sam Bankman-Fried, the creator of FTX. It stated that any such activities would have been counter to normal governance, without client approval and likely criminal based on the evidence available to the Commission. The decision was made as Bankman-Fried rushed to raise money to close a financial gap in the Bahamas-based exchange that, according to some estimates, may be as large as $8 billion, £6.8 billion, if consumers flee. The creator of FTX's rival Binance, Changpeng Zhao, forewarned the cryptocurrency market on Friday that it was headed for a crisis like the one that occurred in 2008 and that there would be more failures to come. According to the Financial Times, he stated at a conference in Indonesia that this week's events were probably an apt comparison to the global financial crisis. According to reports, FTX is being investigated by the Department of Justice and the Securities and Exchange Commission in the US to see whether any crimes or securities offenses have been committed. The Australian Financial Review reported on Friday that the Australian division of FTX had been placed under administration and that the US platform of FTX, which is independent of the company's global exchange, had issued a warning that trading may be suspended in a few days. After the FTX incident, crypto lender BlockFi announced on Friday morning that it was halting customer withdrawals. In June, FTX backed out BlockFi with a $250 million loan, only 1 week after lending over $500 million to the faltering cryptocurrency broker Voyager Digital. Given the circumstances, BlockFi said it was not able to run the business as normal. The group's Bahamian subsidiary, FTX Digital Markets Ltd., is not involved in the bankruptcy proceedings. On Thursday, the Bahamas Securities Commission started action against the organization. No subsidiary assets may be transferred without the consent of a provisional liquidator. Other entities that aren't listed in the filing include LedgerX, a U.S. futures exchange that is subject to regulation, and an Australian affiliate. While Japanese watchdogs banned FTX's domestic activities indefinitely, the group's Australian firm was put into administration. What triggered the FTX crisis? The FTX issue was started last week by news that Alameda has billions of dollars worth of FTT tokens on its balance sheet, suggesting that any fluctuation in the token's price may jeopardize Bankman business. Frieds. According to a statement sent to FTX personnel, consumers withdrew $6 billion from the exchange in the 72 hours before Tuesday morning, when the exchange was compelled to halt future redemptions to stay afloat. Withdrawals have not yet been resumed. New account registrations are being blocked, and current clients are being warned about making deposits through FTX. When the biggest cryptocurrency exchange, Binance, declared on Sunday that it will liquidate its holdings in FTT, amounting to roughly $500 million, citing new findings, the Alameda reports turned into a catastrophe for FTX. Following a sharp decline in the value of FTT below the $22 level that FTX had agreed to sustain, users attempted to withdraw their assets more quickly than the exchange could handle them, which caused the crypto equivalent of a bank run. The primary cryptocurrency asset, Bitcoin, dropped 2.6% on Friday to around $17,340 after rising on Thursday as markets recovered on a surprise drop in U.S. inflation. The head of research at 4Elite Capital Management, a Hong Kong-based cryptocurrency fund manager, Cami Zhang, declared that confidence was lost from day one of the meltdowns and that there was no indication that it would ever return. Standard & Poor's, a company that issues credit ratings, predicted additional falls in the cryptocurrency sector on Friday. Events this week have intensified a dramatic decline in cryptocurrency values that began earlier this year, and they will probably hasten collateral calls and liquidations. More cryptocurrency players might default as a result, according to S&P Global Ratings.